Welcome back to a new weekly outlook. This week, we're trading in a market that's basically being pulled in two different directions. I'm going to try something different. Usually, we go through every single article for the fundamental analysis, but there's a lot that is happening. So I'm just going to go asset by asset. And then if you have any questions, just let me know. So first of all, just overall macro fundamental landscape that we're looking at is the market basically being pulled in two different directions. On one side, we have the Federal Reserve officials that are openly discussing the possibility that AI could push the neutral rate higher, which means that interest rates may not fall as quickly or as deeply as the markets had previously expected. On the other side, we still have commentary suggesting rate cuts are possible later in the year if inflation continues moderating and tariff-driven price pressures prove transitory. At the same time, we have AI-driven volatility, which is creating sector rotations, geopolitical risk premium in oil, which have eased out slightly due to the US and Iran dialogue, and the UK macro data that is deteriorating. So this week, we're going to be focusing more on identifying any decision zones, any liquidity pools, and then, as always, reacting to structure. So if you're scalping, day trading, or swing trading, we're going to go through all those opportunities. Before we look at the technical analysis, really quick, let's just take a look at what's happening this week at the economic calendar. So we started off quite easy. Yesterday was a US bank holiday. And then today we had CPI data coming out from Canada. And continuing down, we have interest rates coming out from New Zealand. So if you're trading the New Zealand dollar, that's what we want to pay attention to. And then tomorrow we have some more FOMC members who will be talking. We also have the FOMC meeting minutes. I don't expect massive movements right when this is released, just because we're getting so much data in general that's coming out. So it's going to be more of like the headline volatility that's going to be moving the market. And then we have, let's continue down, unemployment rate and employment data coming out from Australia. So if we're trading the Aussie dollar, that's what we want to pay attention to. Unemployment claims on Thursday from the US, and then PMI data coming out, and core PCE price index and advanced GDP. That's coming out from the US. So we're going to be paying attention to that as well. Now let's go ahead and take a look at US30. So from a fundamental perspective, the broader macro environment is pretty much mixed here. That's why we're not seeing that equities are collapsing right away. Again, the Federal Reserve officials, they're discussing the idea that AI-driven productivity gains could lift the neutral interest rate. If that is true, then it means policy could stay tighter for longer, which is mildly restrictive for equities. However, we don't have any evidence of an immediate growth shock just yet. Earnings are still stable. The AI volatility narrative is more about capital allocation uncertainty than really any other weakness in the market, especially for equities. So the markets are basically rotating capital here. They're not, the equities are not crashing. So that is very important to understand. From a market sentiment perspective, we are currently still in a whipsaw market. Traders are selling first, and then they're asking questions later when the headlines are hitting, which means that our intraday volatility will still remain elevated, but structural breakdown will require confirmation. And that's exactly what we have been seeing since, even Friday with the massive sell-offs that are going on. In terms of the technical analysis, we're still in a bullish structure here. Let's go ahead and map out some of our key levels. Based off of the daily time frame, as you can see, the candle closures are still above this 49,450 area. You can do 49,500. Any of those is perfectly fine. So this is the current price level that we're kind of just hanging around at on the daily time frame, which tells me that we don't have enough sellers for a massive sell-off. But if price fails to hold that 49,450 area and it continues pushing down, then at some point we are going to come back down into this area right here, into this demand area, and grab some more liquidity prior to a continuation back up. Let's drop down to the 4-hour time frame. We do have major supply that is sitting at that 50,250 or even 50,600 area, so closer to 600, around 50,500. That is the recent high and the likely liquidity pool, which is above those equal highs as well. So if price continues pushing above, let's say based off the 4-hour time frame, major level that we have is going to be 49,700. If we can break past that, then we're looking for the next move up into 49,000 around 900, and then finally tapping into that 50,200 or even 600 area prior to kind of figuring out what is going to be the direction here. But that is the next major level if price does end up breaking above 49,700. That area here is basically acting as more of a rotation level repeatedly on this 4-hour time frame. As you can see, every time price taps into it, it does pull back down, but on the daily time frame, we're still closing above that 49,450 area. So what we can also do here is mark off this support that price keeps coming back and closing into on the intraday levels, which basically tells me that anytime price comes back up here, which it recently did, if we drop down to the 1-hour time frame, it's going to reject and it's going to come back down into that 49,300 area. So this is my overall range to trade in this week until the data comes out, until the headlines come out. But if we can get a rejection into 49,700, then we're looking for sells all the way down here. If we get a rejection into 49,300, then we're looking for buys. But this in between basically tells me that right here is going to be my no trade zone. So I need to have already caught a trade for sells coming all the way down here, or I need to establish support for buys. But if price is kind of hanging around where it's at right now, that means that this is a no trade range for me at the moment. Make sense? Any questions?
Makes sense.
All right, perfect. So that's for more of like your scalping, day trading. That's what you're going to be doing. In terms of swing trades, again, we're just kind of waiting to see what price ends up doing here. Are we going to break above the 49,700, or are we going to get candle closures below the 450 area and then a continuation down? So that's when our swing trades are going to happen. Let's go over to GBPUSD. Same thing on the daily time frame. We do have nice rejections of those high levels coming up into 1.39. From a fundamental perspective, we have the UK unemployment, which is currently sitting at a 5-year high. The wage growth is cooling and the market is pricing more Bank of England rate cuts, which is weakening the pound structurally here. Whereas we also have the US rate narrative remains mixed, but carries a hawkish tail due to the higher neutral decision that we just talked about. So here, that keeps the rate differentials tilted towards the dollar more. From a sentiment perspective, GBPUSD is likely to sell rallies unless the UK data improves materially. So there's no strong catalyst for sustained pound strength this week. In terms of technical analysis, we have a nice bottom wick rejection here, but I'm going to mark off the support where the candle closures happened, right at this level around, we'll just call it 1.353. If I look to the left, we do have a lot of rejections here. It has been respected as resistance in the past. Let's go ahead and drop down to the 4-hour time frame. Based off the 4-hour time frame, we just came back up after a nice sell-off and rejected right here with a nice top wick rejection right at 1.357. So of course, price is going to push back down here. Neither of these currencies are active at the moment while we're recording this. It's more of like Asian session going on right now. So here, what we need to wait for is drop down to the 1-hour time frame in terms of scalps or even day trade opportunities. I need price to push back down further. A zone that I'm going to be watching out for is going to be somewhere around here, which is this previous hourly bottom wick rejection, which was also the previous resistance. If price can break below that, then I'm looking for sells at a bare minimum to come back down to previous lows, starting off with about 23 pips. So again, a quick scalp. And then a continuation down for 50 pips all the way down here where the previous hourly support was. If price continues breaking below that 1.353 area and we can hold on to this area as resistance and continue pushing down, then I'm going to hop back up on the 4-hour time frame. And then I'm going to start targeting my TP areas down here into 1.335 or 1.348 area. So clearly we still have price creating these lower low formations. It's just that anytime a lower low is formed, even with bottom wick rejections, the candle flips and pushes back up, which tells me that we don't have enough sellers just yet in the market to continue pushing down, but we are getting those lower high and lower low formations, even in wick rejection formations. It's just that we need to have that strength coming in. EURUSD tends to be quite similar in terms of market structure with GBPUSD. The fundamentals here is that EURUSD is trading primarily off of the US rate expectations. If the market leans into the higher neutral rate narrative, then the dollar is going to strengthen here. If the market leans into looking into cuts later this year, then EURUSD can bounce off of the current levels that it's sitting at. Based off of weekly timeframes, we're still sitting at very critical levels as well. So if I hop back up, that level that I just marked off here, you can see it's a previous weekly resistance, cutting right through previous consolidation areas here too, back in late 2020. And then if you zoom out a bit more, then you see that price keeps reacting at this level repeatedly. So that is currently our 1.183 level. Drop down to the daily, and that's exactly where we rejected with the yesterday's daily candle. Even if it closed weak bullish, that still tells you that, we don't have enough sellers to continue pushing just yet. So there's no strong Eurozone catalyst driving this independently at the moment, or at least for this week. So this is more like a range driven pair. It's not trending. It's also not dropping. It's just simply reacting to the dollar flows that we see. So at the moment, we have a major level that is sitting at around 1.2 level right here. You can hop back up to the weekly, again, zoom out, and you'll see how there's massive rejections here. You can go onto the 4-hour time frame as well. That is the previous massive rejection that we got before this entire sell-off that started. So that is a very critical level here. That zone is pretty much capped by that recent spike and then a reversal back down. So what we're looking at here is, can price hold onto a support and then continue pushing back up? It has already kind of tapped into this 4-hour consolidation to the left. Now we need to see if price can hold on to this entire area as support and then continue pushing back up bullish. If that happens, then we're looking for buys to come back up into 1.2 area. If I see a rejection here and then push back down, then for scalps or even day trade opportunities, you can look for sells to come back down into 1.183. Nothing in terms of swing trades just yet. Any questions on the dollar pairs before we move on to the rest of the pairs?
No, that made sense. Thank you.
Awesome. Now looking at GBPJPY, again, we have a weakening UK labor market and potential Bank of England easing. On the yen side, the yen strengthened recently as risk sentiment cooled, and that combination is pretty much putting that pressure on GBPJPY as we see right now. This pair does move aggressively when we see a lot of fundamentals or headlines come out, especially with Bank of Japan or yen related. So we're going to expect sharp moves rather than slow trends here. Overall, based off of the daily time frame, we are still sitting in that bullish market. We are sitting at a pretty critical level to see if this is simply going to be a new support prior to continuation back up. But right now, I wouldn't say that we have a swing trade just yet, but I do think that we're preparing for one. The level that we're sitting at right now, as you can see, previous massive rejection here, which is, I'm just going to call it that 207.6 level. If I hop back up onto the weekly, that was a massive top wick rejection on a weekly time frame from July 2024 before a sell-off consolidation for the rest of 2024 before that massive rally up in 2025. And then if I zoom out a bit more, then again, held on to a very strong resistance right at this 207.6 level. So if we're looking for corrections right now to push back down, let's come on to the daily time frame. We also have a key level right around here at 209.3. If I can see the previous lows here being broken, then I'm going to be targeting these previous support areas right here as my final TP. So I'm looking for wick rejections or even candle closures right into this area, but that is a swing trade opportunity that I would be looking at for GBPJPY if price does break below that 207.6 area and can hold on to it as resistance. When I come onto the 4-hour time frame, a lot of consolidation, price just holding on to this major supply zone, as you can see, and then a nice sell-off recently, a quick lower retracement, another push back down, creating a new lower low formation, but a weak retracement here. So what I want to see is price breaking below that 207.6, closing below it, and then looking for a break and retest formation for those sells to come all the way down and then catch that swing trade opportunity. This entire zone is for about 200 pips. So I think we have a great opportunity here. It's just that I would want price to clear out of this consolidation prior to looking for a trade. For any buy opportunities, just hold on to that 207.6 as support and then a continuation back up. You can look for day trades or scalp opportunities in between. You have about 163 pip range here. So depending on what session that you're trading, you might get better opportunities here during the London and New York overlap just because of the volume and the volatility in that session. But you could see some opportunities here, maybe going to late Asian right before London opens up. And then I don't think that we have enough catalyst to push above that 209.3 area. But if that does happen, then that is the swing trade opportunity for buys. Anything here is just going to be scalps or even day trades. Anything below this can turn into a potential swing trade opportunity. Now, this is a pair that we need to be careful of as well. This pair is trading the rate differential versus the safe haven narrative at the moment. If the market believes the US rates will stay elevated, then we will see that USDJPY will bounce. If the risk deteriorates and the yen demand returns, then we will see that the downside will accelerate here. So that is why we need to be extra careful when it comes to this pair. Looking at the daily time frame, we can see that last couple of daily candles are just closing within the range. So we see that consolidation there, which proves, the fundamental side that we just discussed. So if possible, I would kind of stay away from this pair unless you're just scalping and then you're looking for a zone-to-zone trade. But I do think that we have better opportunities with the other pairs with, equities with the US30, NAS100, GBPUSD, EURUSD, and especially GBPJPY. And we'll take a look at gold soon as well. But if possible, I would stay away from this pair and I would just focus on capitalizing off of this only when swing trade opportunities show up. So even on the hourly time frame, a nice sell-off, not even a retracement, just like a bit of consolidation, and then another sell move that's potentially setting up to come back down into 152.7. So like I said, this could be a good, scalping opportunity to grab a couple of pips, but I think that there's a lot of other better opportunities setting up in the market. All right, now looking at gold, we had a massive spike up and then into the 5600s, pull right back down, tapping into around 4,300 or so, and then a quick little retracement, just holding onto this area as resistance at the moment, based off of the daily time frame. Here we saw that gold declined in thin liquidity as the US dollar did start to strengthen in the last couple of days, especially. The market expects the Federal Reserve to hold steady in March, so that's going to be another big catalyst. That's why all the FOMC members who will be talking, that's why we need to pay attention to what they're going to be saying and, what are we expecting going into March. But overall, the expectation is that we're not going to see another rate cut until July. The AI neutral rate discussion slightly also pressures gold because it implies higher real rates for longer term. And meanwhile, we also have the geopolitical risk premium, which eased slightly with the US and Iran dialogue. So right now, we're not seeing that gold is being driven by any single catalyst, but it's more just consolidating here. So based off of the daily time frame and off of the weekly as well, I'm just going to mark it off here with a couple of weeks ago that candle body opened on that bullish candle, and that's kind of where we're tapping into at the moment here as well. 48.37, you could do 48.40, you can do either of those, that's perfectly fine. And then come down to the 4-hour time frame. So that confirms everything that we're seeing on higher time frames as well. So here we just need to be, extra careful with this pair because that 5,000 level is still pretty much valid, but I'm going to update it because we need to break past 4,900 now. So 4,900 area and then continue back up bullish. Now what we can do is use that 5,000 mark as our TP. So now we can look for those pullback buy opportunities to come back into that 5,000 mark. Price is consolidating here. When you drop down to lower time frames, it does consolidate right above it, below that 5,100 area. So essentially what I'm looking for is price to hold on to a support here, consolidate a little bit more, break past that 4,900 level, look for a scalp or even a day trade opportunity, take some partials around here, and then look for a deeper retracement move into 5,000 mark. If we see that gold is going to drop further, I do think that it needs to come back up into the 5,000 mark, potentially grab some more liquidity with like quick topic rejections or some fake outs, and then a further continuation down if we're going to look for sells. But as of right now, the structure is still bullish. Nothing has really changed. Even when you look at the 1-hour time frame, price is still bullish when you're looking at the macro structure. Like nothing has really changed. But yeah, we did tap into those all-time highs. We did see a massive retracement, and then we saw a bit of a pullback here. So in terms of even intraday structure, like nothing has really changed much, but we're going to capitalize off of any smaller movements that are going to happen here. For any sell opportunities, I want price to break below that 48, you can say 40 area, 48.37, whatever. Break below that and then continue back down into 4,700 area, which is going to be down here because these are clean sells here to the left. But I do think that we're going to consolidate and then potentially maybe even see a bit of a retracement prior to a further sell-off opportunity here. Any questions on any of these?
Nope.
All right. So overall, just remember that this is more like a liquidity-driven, headline-sensitive environment that we're trading. We don't have any confirmations when it comes to swing trade opportunities because each of these pairs are sitting at, weekly, daily, and even 4-hour levels. So when I say swing trade opportunities, my definition might be a little bit different compared to the other analysis that you're seeing. I want to see bigger moves because those are the swing trade opportunities that I want to capitalize off of based off of the daily time frame and the weekly time frame. But I do think that we do have great opportunities when it comes to scalps or even day trade opportunities across all of these pairs. Some of the pairs you do have to be careful of, like USDJPY, but all of these are just structural levels that are going to determine whether this week we're going to see more rotation of capital or if we're going to see more expansion moves that we can trade off of. So again, trade the reaction to these levels. Don't try to trade the headlines and try to interpret, what the market is overall doing. Other than that, I will see you guys for the next weekly outlook.